So today's presentation by Jeff Kilian, let me give you just a brief introduction to Jeff, somebody we've worked with for a very long time. And Jeff is the founder and chief market strategist for the Inside Technician. And he's really one of those top traders out there in the world right now. He's devoted over 20 years developing a proven and successful repeatable methodology based on technical analysis and able to find, track, and trade with the smart money. And that will be the highlight of the presentation today, is to really give you some insight into how that smart money is moving and how you can take advantage of that. He's also the author of his publication, the Nightly Market Intelligence Report, which is a very, very good publication that goes out 5 nights a week to his clients. We're really excited to have him in the room. I'm sure you'll enjoy the presentation, and I'll go ahead and turn the time over to Jeff. Take it away, Jeff.
Okay, well, thank you, Dave. For my part, I want to thank you for inviting me today, and we're going to get right into a very, very comprehensive webinar. It should run about 45 or 50 minutes and talk about how to identify the true high probability trades. The greatest traders in the world are the ones who have had to go through a series of tests to be able to determine, was their fortitude stronger than anything that was ever in front of them. And they kept going and kept going and kept going. And I know this because when I first started the study over 20 years ago, I took 3 years out of life. And I'll pull up this slide here real quick on the Inside Technician and our title for tonight before I continue. At that time, I was dead set determined to be able to live anywhere I wanted in the world and make what I needed to make and not have to answer anybody. It was just my personality makeup, being totally honest with you. I had to figure this out no matter what. And when I realized that it was my life's calling, I was prepared to go through whatever I had to go through in order to be able to be one of the top traders. I had no idea what I had to go through at that time in order to get to this level. I think that if I had realized that, I probably wouldn't have done it, tell you the truth. But better that I didn't know, and I took 3 years off out of life, and then the last 6 months up all night, every night, writing code within a program to be able to take everything that I had come up with and put it into an actual system. Systems that are sold in the world today are followed blindly by many, many traders with very few rules disclosed. This is probably one of the most dangerous routes that any investor, trader, advanced trader could ever take. Because once the losing trades start to rack up, you lose faith in a system because you don't understand its rules, its parameters, and what it's supposed to represent at the time the signals come across. Another approach is to fully understand everything that you need to know in order to be able to take the information, quantify it, and turn it into actionable intelligence in the form of actually taking trades. Now, what we do want to do as a real-life profitable trader, and there's many of you who are beginners, intermediate. I recognize some of these names that are in this room tonight, and they're some of my clients. What needs to be done is to follow a structured, learnable, and repeatable process. Again, Dave touched on it briefly here. I don't want to talk much about myself. I'm not that type of person. But for the sake of explanation, there are many areas where we have been publicized, worldwide webinars, Traders World Magazine, many articles. The #1 selling book on Amazon for its category, Learn the Secrets of Successful Trading. I wrote the chapter on smart money trading. And so through the years, we've been fortunate to be able to be recognized as a legitimate source for educating people on how to cut right through the chase and be able to do this for a living. The buy and hold strategies are gone. They're not coming back. We need to trade the volatility like a professional, long and short. So with that said, learning how to trade the smart money, for those of you who are following and reading this with me, is really the guarded secret of the world's greatest traders. When you knowing that you have largest institutions trading in the same direction that you are, who have made the move shortly before you have, and you have identified it, it gives you the real confidence to trade like you never have before. And what it really gives you the confidence to do is to trade more contracts if you're trading futures, trade more shares of a stock. If you're a simple market fund timer, okay, you're loading up. It all begins with expert market timing. I'm going to repeat this again. It all begins with expert market timing. You need to know where you stand every single day in the U.S. markets, whether it's market net neutral, neither long or short. You're just getting in long because the trend is just starting to change to the upside, or you're just going short in your bias because the market is just starting to trend to the downside. Learning how to time the market like an expert, even if you were just a market fund timer, not into ETFs, not into futures, not into options, no higher leveraged vehicles, advanced option strategies, forget all that, will allow you to outperform the market averages by a wide margin, again, because you can be short or long. So, we're looking for market turning points. We're looking for high probability market turning points to go from one direction to another. The smart money will move the market. And when you have identified them, then you trade in the same direction. For the sake of explanation, only 2 sentences. The smart money are the people who are the largest hedge funds, the largest institutions, the deepest pockets, who can afford to take a short-term correction in the market because they know, because of the deals that they have organized with the institutions who are selling the plate of the day to people who are uninformed investors very well, that in a short period of time, they're going to move these prices from one level to another, and if it's trading up, they're going to sell out near the top long before the herd mentality, the majority of market participants ever have the chance to find out. So let's talk about how we can change all that and how we can take a look inside the market, which is the largest reason why the inside technician was actually formed, to get inside the market and see what's going on behind the prices. You're taking a look at a daily candlestick chart of the Dow Jones Industrial Average using this singular market at this time as a proxy to identify the current state of the U.S. markets and the realities of future directional price movement. Now, the reason why we're looking at the Dow here and not the S&P 500 equities per se at this particular moment in this webinar is because the majority of the time we're able to pick up clues from the Dow that we don't get from the S&P equities, nor its sister market, the S&P 500 E-mini futures, which we're going to get into later, talk about real-time trading. These volume spikes that you see in the subgraph below very clearly represent, again, the largest institutions, hedge funds, people that manipulate prices, who have the deepest pockets and do move prices from one direction to another. It's very clear to see that after this spike took place, the market had a sell-off here, found a bottom, traded up. The decision was made here on 12/21/2012 to go long again with a short-term correction, and prices start to trade up. And look at how far this volume spike was able to push the market up with a few in between. Yes, continuation, volume to act as the catalyst for the prices to continue up. And here we have the most recent volume spike by 3/15/2013 that's just come in. Prices have moved sideways, essentially locked within a trading channel here, moved up, tested a new high, okay, into uncharted territories, moved back down with a shakeout here, and then because of the most recent 2 days action has initially began a third leg of the uptrend here. It takes a while for the volume at this magnitude to play itself out, but it always does. So the question becomes, if I wanted to be long yesterday or today, how could I know how to do that, and how could I capitalize on that type of move? Well, the first thing we want to do, as I always mention, and I mentioned earlier, is let's look at the macro view. Let's look at the current state of the entire U.S. market to determine if we need to be market net neutral, beginning long, beginning short. And as this trend changes direction, in this case a breakout of a superior resistance level right here at 14,662, which was earlier resistance, is laid out by these two bars, now becomes support. How can I deal with that type of change? How can I act with confidence and trade it with more confidence? Looking at a simple trend line construction here from this data point to this one, this trend line was never violated, even with the low of this day. The market has been narrowly trading up, yes, but trading up. Yesterday's action on 4.9 was a clear close above the highest level that the market had seen in history, right here. The high indicated future directional price movement was possible to the upside. In isolation, a chart pattern, volume behind it, a resistance level. Okay, a showing of what can happen. But if we take a look at a pair of exponential moving averages right here, we can see that they never cross from above to below, and that they were continuing to be long since all the way back here at 2/27/2013, because they never ever looked back. If we take a hard look at the stochastics momentum, an excellent, very strong identifier of a change in direction after a pivot point low or high, that the crossing here, because of yesterday's session, would indicate more higher probability movement to the upside. A trend line here on the Chaikin advanced decline oscillator, never violated to the downside on a longer term, from a longer term perspective. Simple things. MACD flat starting to trade up. But here, if we take a look at the money flow index, our chief indicator to find, track, and trade real smart money, it's clear that we have a trend line that's been established from a peak to another peak and has been violated to the upside after the movement had bottomed out here and a large amount of momentum to the upside had already been etched out from this indicator. If the market was going to go the other way, this indicator should have turned to the downside or remained flat. It never, ever did. So just taking a look at a few very basic time-tested indicators that cannot cancel themselves out because they are basically very simple accumulation, distribution, mathematical formulas that arrive at a graphical representation. It's very visually easy to see and act on, where these market turning points have a high probability of actually taking place. Now that we have a greater perspective of what the future directional price movement can be based on just a few things that we've covered here, and we're just touching the tip of the iceberg here. Okay, we want to go back and we want to take a look at the most recent level here at 14,662, and we want to see if there are any other levels on any other market that have had similar but not the same layouts. Where can I get through resistance? Where is that level? Short of going through an entire analysis on the S&P equities and the S&P 500 E-mini futures, just copying pretty much what we did right here, which is exactly what any trader should do. Look at the larger picture. It was very clear to those who've been trading a long, long time that today, or yesterday, it turned out to be today, could be one of the most profitable moves that the market has offered any trader in a long, long time. So now I want to get into the next showing of a real-time trade that I actually took today in my favorite market, the S&P 500 E-mini futures. But first, let's close this out so we can focus in on exactly what we want to present here. Okay, what you're going to see is a layout workspace I have created for the near month, June 2013, with the move that had taken place today. Now, before we get into this move, what I'd like to do is I'd like you to notice this level here at 1568.50. That's 5868.50, and you can write it down if you like. That was the level today's prices had to cross above and close above to take a smart money high probability trade. Now remember, we're not talking about any trades, traders or investors. We're talking about when everything is lined up and we have real smart money behind us. In this case, in this market, waiting for the trade to come to us. Show me that you're worthy of my money and my emotional capital, because I'm not into trading just any trade. I'm into trading the trades that are going to give me what I deserve, what I've worked for, and what is out there lying on the table. And if your skill level is not as great as mine, then unfortunately I'm taking it away from you. That is just the way this business works. So, having the education, having the experience, knowing that this is a level that's been established previously by a 15-minute chart, I have laid it out on a 1-minute chart, and I'm looking for the violation of this level, in this case to the upside, because the daily money flow indicator and a lot of other indicators have told me that it's very probable that the market could blow into a brand new high today, which is exactly what happened. So looking at this level, not to belabor the point, what I want you to see here is this level right here. This level is 1568.50, and I've drawn a trend line here for everyone to see using the open of the bar at 6:45 a.m., the 15-minute chart bar, as the ultimate high that prices needed to get through and close through in order for me to be interested in the trade. I'm looking at the MACD indicator, and the actual crossing from above to below right here was right here at this point, somewhere between 9:45 and 10 a.m. If we take a look at the exponential moving averages that we just saw on the daily charts, clearly hammering out a market turning point. They were long right here between 9:30 and 9:45 a.m. There it is. Here's the level to be crossed on a closing basis. If we take a look at Fibonacci ratios, I believe that I was one of the pioneers, now going over 20 years now. In this analysis, I tried every single Fibonacci technique available at that time, exhausted them all, and came up with the only one that really was able to identify high probability trades connected from here to here, broadcasted out in the future It's very easy to see how prices reach levels. Again, here, traded up, couldn't continue up 2 times, so now we have a triple high and prices finally exceed the 100% retracement level, giving us a green light to be long today. Here, taking a look at the money flow index. This is probably one of the best showings I could give you at this take on this webinar. The level of this indicator at this point completely bottomed out, as compared to this level being so much higher. The indicator falls off on a negative divergence, finds a bottom, trades right back up, crosses through the trend line, and this is at 9:45 a.m. So it happened between 9:30 and 9:45 a.m. just before the level was crossed from below to above, where at 1568.50, the dominant resistance level, again, that would determine whether it would be in this trade or not. Your job, my job, is to make things as simple as humanly possible, because this can get very complicated very quickly. So we need to be able to break this down like a pilot's checkoff list and go right through them one at a time and get right back after reviewing all the 15-minute charts, because they have given us the larger picture of where the prices will go in the near-term future, right into the 1-minute chart, looking for the precision entry. The 15-minute charts on an intraday basis, on a real-time day trading basis, are the mother of all time frames. Anybody who's been trading real-time for a long time knows this. I know that there's a lot of professionals out there. I know there's a lot of beginners. But for the beginners or the intermediate people, the 15-minute charts are where we need to be, because the tide is coming into the beach to be long. The momentum is there. It's just a matter of, how can I know exactly where to get in? How can I act on that? And how you know is because you have a very large amount of volume that comes in right at or near the exact level to be crossed, in this case from below to above, to push these prices through those levels. The reason, the catalyst for the trade to be taken, in this case to the long side. A high probability trade setup. Most of the indicators will fire one way or the other within a very short period of time within the 15-minute charts. All the while you're managing these charts, waiting for this trade to come to you. We're reverting back to the 1-minute chart, and we're looking for the precision area to be in. Now, we don't have the time to back up this chart and go through blow by blow for a trade demonstration, like I do on the Nightly Market Intelligence Report. But what we do have enough time to do is talk about what was the relationship between the daily charts and the 15-minute charts. It was clear to be long, wasn't it? What were we waiting for? We were waiting for the shakeout to take place. Prices move back up. And what happens here? At exactly 9:32 a.m., there's 32,617 contracts traded. That certainly didn't happen from all of us in this webinar room, did it? I don't care how much money you've got. Didn't happen from me. My max is 90 contracts in this market. That's it. Because I personally believe I trade over 100, I get on the radar screen and somebody's tracking me. Okay, so the level is crossed from below to above. A lot of volume comes in. Prices are moving up quick. It's time to get in. Go for the trade, and I'm in at 1569. Flat at 9:32 a.m. above the level to be crossed. I got to stop. That's 1567.75, a point and a quarter below. The volume that came in at 9:32 and 9:33 was enough to set this off in motion. Now, as prices trade up, there's really no need to be out of this trade in this kind of strongly uptrending 1-minute chart that is obviously confirmed by the 15-minute charts until you have a trend line violation. This data point connected to this one here, if prices turned right back around and violated this, I would have been out of this trade and locked in a profit, because that is your job. You absolutely positively have to follow the rules, and when you have a profitable trade, when things start to turn right back around, or the volatility behind the turnaround is something that you really don't understand at that point, don't try to figure it out while you're in the trade. You get out of the trade and you look for the answer later. So the trade stays and moves up out here, all the way up here at 1579.50. This is probably, not have to go back and look at, but it's probably the second largest winning trade in the history of the nightly market intelligence report. And I guess we're all very fortunate to be here today when this actually happened, because usually we're picking up 2 points, 3 points, 4, 1.5, sometimes 5, sometimes 6 on a great day. But this is just out of the park today. So I don't think it's any coincidence. But getting back to staying focused here, let's talk about exactly what happened. Where this was a brand new uptrend as far as I was concerned, right? On a call, I have a few different levels. My entry level long is a smart money bias call 6, right? This is a 6. It just started out. As the trend goes up, it gets stronger. You go to a 7, 8, 9, and a 10. Since the market was at a superior resistance level, and this is exactly where it was crossed in this particular market on the S&P 500 E-mini futures, I had no choice but to trade my minimum. I had no idea the prices were going to go that far. Let's be honest. Who could have known? Only the insiders really knew. But I did know that I had a shot, and I was going to ride it until it was over. So I went for 20 contracts. That's it. That's my minimum. But the gain in the trade was 10.5 points. Times $50 for every full point move was a gain of $525 for every contract traded. Times 20 contracts was a gain for the day at $10,500. We all wish this could happen every day, but it doesn't. What does happen are high probability trade setups that you wait to come to you, that can prove to you they're worth your time and effort, your money, your hard-earned money. And I want to end this portion of this webinar presentation. If everybody wants to write it down, you can. It's your choice. Your greatest positional advantage as a trader, a real trader, is patience. Waiting for the trades to come to you. There is no greater impartation of knowledge, experience that I could possibly give any of you tonight. It's more profound than that. I don't have any. It took me a long time to realize that. So let's talk about what we have in the form of something that we feel, in the form of a proven service that can actually help you to follow along every day with what we do here on this end. Let me see if I can get back here. Yeah. Okay, what we do offer is a 14-day risk-free trial to this premium service. The Nightly Market Intelligence Report is a video that's broadcasted 5 nights a week. All the analysis is prepared only by me. I record it. We're talking about 20 minutes of runtime. We're talking about expert market timing. What's the current state of the U.S. markets? We're talking about the trading levels every day that are laid out by these daily candlestick charts. and looking at the areas where we have trading ranges to trade in between if we're trading futures, short or long, right? So we know where we stand every single day in the U.S. markets. We're covering all these indicators every single night. It is very, very comprehensive. And I think the best part about what we can offer to those of you who really want to learn how to do this is that everything we do is delivered over in a fully transparent environment. I don't hold anything back. Nothing. There's no secret doors. There's no secret systems. Nothing. It's all a structured, learnable, and repeatable process. After the expert market timing, we get into ETFs. We cover the S&P 1500, 10 sectors. Using them as a proxy, we analyze these in detail to trade the corresponding ETF symbols, against them. After that, we're going right into the market that you just saw me demonstrate a real-time trade today on the S&P 500 E-mini futures, and we break down everything that's been traded every day, and most every day trading something. There is a 14-day risk-free trial for $49, and then a regular monthly subscription fee thereafter is $159. I mean, outside of this, what I want you to see next is something that we just started including in this service about, I think it was about 2 months ago, and it's the Nightly Market Intelligence Report newsletter. This newsletter, even as a standalone informational newsletter, has more content inside of it that can be used as actionable intelligence than I've ever seen in any other newsletter. So we begin by talking about the performance summary, and we talk about the latest bulletin on the date that the newsletter was put to print and sent out to you in the same email that you click through to see the video every night. So every night you get the email, this is included in it, and every 2 weeks when it's updated, you get the updated newsletter as well. We talk about the current state of the U.S. markets at that time, what our overall market bias is, and here that is. And then we talk about the levels, as you can see, no resistance level. Last 2 trading days at 14,662. We talked about that, as a matter of fact, today. And then we get right into some of the ETFs that have shown some of the better returns as against, traded against the sectors, showing you all these charts right in the newsletter. I think one of the most important things that this newsletter has to offer us is the smart money trading methodology versus the S&P 500 equities index returns. Now, there's a lot of ways to, bundle up information and get it out to all of you. But I can tell you that calculating the net returns based on a relative comparison between the daily open and close of every trading day is the benchmark for measuring real returns on a daily basis. So here, as you can see at the 0 mark, is where we began back on 9/4/2012, and you can see in the blue line where we are versus the S&P. There's even more clarity based on the visual representation as compared to just talking about returns that we have been able to put together. The equity curve is here. And there's also links to course material, whether it's the Expert Market Timing course or the S&P 500 E-mini Elite Trader Training course, which has a special ends, I think Friday at 12 o'clock. So outside of that, if Dave could please include the link so that everyone could click through to get more information, or if you'd like to, you can subscribe to this 14-day trial and take advantage of what we feel can really help you. Our job is to help you empower yourself to become a real-life profitable trader. You give us the full 14 days, and we'll prove it, like we've already proved to over 250 subscribers that we have today. Can we verify if this link is working? and showing up, please, before we finish up.
The link is live, and you should all have a browser there that just opened up with the page. Good, link is working. It looks like. And as Metastock, what we do is we partner up with a lot of education out there, because Metastock, we don't do education per se. We'll teach you all you want to know about our software, but it gets down to the brass tacks of trading specific situations and specific types of mentoring programs. We leave that to some of our partners, and we're pretty choosy about some of the guys we work with. Jeff was one of those guys that as we've had Metastock users go to him, they've reported back to us that they had a great experience with his education. So we definitely would love to see you try his 14-day trial to the Nightly Market Intelligence Report. It's a report that I receive and like very, very much. And so if you have any questions for Jeff, maybe right now would be a good time to go ahead and open that up to Jeff. Jeff, in fact, there is one question in here. One or two. It looks like Edward is curious to know what period of exponential moving average you're using.
Okay, Edward, can you still hear me okay, everyone? Okay. The exponential moving averages are a 4 and 8 period, and that applies to the daily charts and the real-time charts. All the parameters, the time periods that I have demonstrated tonight have all been back tested out. They weren't just chosen randomly. There's a lot of time and money invested into testing. Even looking at the subgraph below here, you have a 21 period average daily volume in red that's overlaid on top of standard volume bars in the subgraph below. That wasn't chosen easily. So to answer your question specifically, I'm using a 4 and 8 period exponential moving average pair, and exponential moving averages because they putting a little more weight on the most recent price activity, and they really hit the turning points running. Very, very difficult to discount the hard factual trading results of a paired 4 and 8 period exponential moving averages when you test them out in isolation. Next. Bernie. I'm a quarterly cycle trader. I use the Dow Index and diamonds. Is this optimal for my trading style? I studied cycle trading, Condrive. I studied a lot of different avenues to incorporate that into my trading. And I had found that because of the actual definition of a cycle being beginning at a specific point and ending at another specific point, sort of anchored to, a certain date or dates within close proximity, that there were too many instances where I was late or early. Not that it didn't have direct application to profitable trading, but for me, just for me, my style, I was a little late or a little bit early. I hope that answers your question. Next. Is there any live call as the market unfolds during the day, JLC? No, not from the Nightly Market Intelligence Report. Not for that price point. We do have a live trading room that we are considering putting into play. As long as we have enough demand, we will do that. We also have something in the works for options, overlaying them on top of the sectors and the ETFs that are traded against them, because the points that are earned on the sectors really aren't much. But when you look at the ETFs, the moves, if you overlay the option strategies, there's real money there. Bernie says, I'm always early. Okay, well, I think this can help you out. And I appreciate your honesty, because I went through that a long time ago, and it was very, very difficult to deal with that. What time does the Nightly Market Report come out? Okay, it reaches all subscribers no later than 9 o'clock. Lately, we've been able to get them out by 8 o'clock, 8:15. is the normal time. If there's a lot more analysis involved, we have a major market turning point, a lot of things have changed in a single day, it could be as late as 9. But normally, 8, 8:15, that's the idea. Question is, so what made 1568.50 level so significant? Because 1568 was a level that was broadcasted out on the 15-minute charts, which have more overall weight as compared to the 1-minute charts. So this is the way to actually analyze, to trade as a professional. We're looking at the 15-minute charts, the indicator setups, the price levels, and then we're looking for the 1-minute charts to really come through those levels, but with a lot of smart money volume behind them. Edward, Eastern Standard Time for a nightly newsletter. Yes, sir. Excuse me. By 8:15, 9 o'clock, the very latest, the Nightly Market Intelligence Report newsletter is in your email inbox with links to the recorded video, with a link to the Nightly Market Intelligence Report newsletter, and with a link, if you pass it off to a friend where somebody else can sign up. Runs about between usually 16 to 20 minutes, sometimes a half hour. Any other questions? We still have 67 people in this room. Somebody must have a question. Okay, I think we have time for one more. And we're just about running out. Edward Kim is typing. Steve is typing. Are the indicators available on most platforms? Yes, they are, and that's a good leading question. The answer is that I'm going with the Metastock version 12 program because everything is in real time. Doesn't matter what you're looking at in today's world. Everything is broadcasted in real time. I need that information. I need those prices to come through right. They got to be on the money. And they're coming through on the money. So it's worth the stretch to go real time because, I mean, if you're going to trade and you're really going to make money doing it, you've got to be real time. It's an evolutionary step for a money-making trader. Do I have an opinion on the market? Yes, I do. Based on what I'm seeing, what I saw today is either a glorified blow-off or it's the beginning of a third leg of an uptrend within the market. This will play itself out, but smart money's there. It's going to play itself out one way or the other, and we're going to be there on the report to be able to capitalize and give you the analysis updates every single day, 5 nights a week. How do you trail your stops and where do you take your profits? This is SL, but I stop loss. Okay, got it, Steve. I'm looking, when I'm trading the S&P mini futures, I'm looking for the pattern setup, right, on the 15-minute charts, and then where the 1-minute chart pattern will coincide with a risk that is within a point to a point and a quarter away. It all ends up with the chart pattern there. So I'm looking at the place where I'm going to get in. My stop is located most of the time no further away than a point and a quarter, because any trade that I'm taking is based on a predetermined price profit target. In this case, this was the rare exception. But any time that I'm taking a trade that I demonstrate on the report, that I teach here, whether it's in the courses, whatever, I'm looking at a trade that has already, the price profit targets have already been well defined. A minimum of a 3-point move to the upside. So for every dollar that I can lose, if my stop is a point away, I have to know that I can make 3 points in order to take the trade. So you have a 3-to-1 risk-to-reward ratio based on a setup that's already been defined long before the trade's ever taken. So you know where you stand every single day. Are there any candlestick patterns that you consider the most reliable? It's an excellent question. I use candlesticks because of the visual superiority they give me over bar charts. I'm a very visual trader. But I don't think there's any hard statistical evidence anywhere. A lot have tried to prove out that there are any specific chart patterns in isolation that prove out to be highly profitable. Will we be able to make next day trading decisions based on your nightly newsletter? Yes. The answer is yes. Yes, especially for the expert market timing aspect of your next day trading. We have the levels laid out. You're looking at the indicator formations. You're looking at my analysis, or you're listening to my analysis as you're watching the video. So the answer is absolutely yes. Does a Metastock platform allow you to directly enter trades when bias signals are given? I think that they have direct links to execution platforms that you decide you want to trade through. I think that that's just about all the time we have for tonight's webinar. Dave, are you still there?
Yes, I'm still here. Thanks, Jeff. Great presentation. We're going to go ahead and wrap it up here. We want to make sure that if you do not have the Metastock program and you would like to have a free trial of it, we're happy to set that up for you. I'm going to go ahead and put my contact details on here. I'm going to give you my email address. It's dave.osmond@thomsonreuters.com. If you would like a free 30 days trial of Metastock, definitely send me a quick email. I'll be happy to set that up for you. And visit Jeff's site and sign up for the risk-free report. Thanks everybody for joining us. Best of luck in all your investments, and we'll see you next time here at Metastock for another great presentation. Thanks, Jeff.
Thank you, Dave, for having me. It's been my pleasure to present to all of you. If we could leave these links open for a while so that everybody could go forward, that would be great. Thank you all. Enjoy your weekend.